stop above the S&T here, so the swing high, that's our invalidation point. ES basically formed a lower low, while NQ formed a higher high, as you can see right here. Only one contract due to the high volatility we have today. We have to see how this plays out. We basically fall short of the daily sell liquidity right here. So that's engineered sell liquidity in that case. We want to see that we inverse the gap right here. So I want to see that we close below consequent encroachment or below the inversion favor gap. Would be ideal. We swap by sell liquidity as well, and also trade it into a 5-minute favor gap right here. Doesn't look so good right now. Yeah, looks like we're getting stopped here. Be great if we could trade lower now. I like the reaction here. That's why we have to need to place our stop above the swing high, because only that's our invalidation point. Even basically the ray tracement right here looks really scary. You don't really know if we are already basically able in a smart money reversal in a market maker sell model, but in that case, it was definitely the right stop. So why I'm aiming or placing my take profit below the daily sell liquidity, because we have basically 25,500 right here. It's a really clean draw for price. And we also do have on regular trading hours. Wait, I have to switch to. First, we look how this plays out, then I will show you my draw for price. So, like the reaction, if we can trade lower from here, would be perfect. Would like to see that we form a high within the inversion favor gap. That would be perfect in that case. That we see that the favor gap right here gets utilized basically as resistance, and therefore we have a valid CST in here. Already also with breaking below the low right here, it's a valid change in state of delivery, because that's basically our swing low in here. Would have liked that we actually close below the gap. We close within it basically. That's not really perfect. So as long as we close inside the gap, we're not really in a strong bearish conditions. Right now it looks like we are building up sell liquidity. We could basically stay in consolidation here, basically time distortion until we reach 1030 as a really inside macro actually. Yes, it's looking more bearish. So right here, but yes, definitely more bearish. We have displacement in here, already trading lower. I want to see that NQ follows basically yes, like the reaction of the consequent encroachment level. Still difficult is trading lower. Our daily chart is definitely really bearish, so we swapped already daily sell liquidity 3 times. So like now the reaction, if you can close below it, that's perfect. We'll add one right here, because now I want to see that we move definitely lower, and I will place my stop right here above the high, because now we definitely have to, or a high within the inversion favor gap should be in play. Now I want to see that we definitely trade lower, aggressively, especially with reaching 1030. That would be perfect and ideal in that case. Yes, is definitely aggressive trading lower as well. I really like the reaction in here. So what I wanted to show you is right here we have regular trading hours. And what you can see is that what I was looking for is still basically the gap right here. So we consequent encroachment level, we scrapped the sales liquidity right here, wicked higher, but to me that's unfinished business. I want to see that we trade back to consequent encroachment of the new open range gap from Monday actually. We failed to trade back into it right here, basically on Thursday, with the day before, I think FOMC or something, or yeah, or NFP. I think before NFP. And yeah, then we traded higher. We definitely formed now a high in here, short-term high maybe. Now we are definitely within a market maker sell model, and yeah, trading lower. And we already scrapped much daily sales liquidity, but still there are valid targets to look for. Maybe I take even a more or a target, a partial I mean. So I want to see that we can basically trade through consequent encroachment. That's definitely an important level here. Maybe I take a partial at the lower quadrant, because I regard basically now the move to the downside as a market maker sell model within a higher time frame market maker sell model, and therefore I want to see that we at least reach the lower quadrant of the market maker sell model in here. So I really like the delivery in here. Lowering my stop as well. I think I go break even now, because we displaced through consequent encroachment. That's really clean. So I really like that. So now I will take a partial soon, especially because ES is ahead of NQ. So on ES we are already below the lows right here. I'd like to see that we reach 40 gap, then I would take a partial. Yeah, I take that. So I don't want to play around. We wicked basically to it. Yes is way ahead of NQ, and I'm content with basically booking something in here. Maybe not the perfect partial, but I'm really content with that. We have still one contract on right here, so really content with that basically. And also we have a really aggressive move to the downside, therefore that's in that case inefficient. Why is it still expected? Because we also, if we look to the left, have a really aggressive low resistance move to the upside. Therefore, a low resistance move to the downside can be expected, and therefore this region right here is actually balanced. I would like to see that we actually only stay within the lower portion of the higher time frame gaps, so only within the fair gap right here, and maybe even leave the gap right at consequent encroachment basically open as a breakaway gap. That would be perfect. So I'm really content with the partial here, because with reaching basically for the lower quadrant, as you can see right here, we perfectly wick to it. Now we're seeing some retracement, definitely some support level in here. Even if we completely displace through it, I'm content with taking a partial here. To me, that's basically perfect in that case. So yes is already near the sales liquidity right here, as you can see. There we also can reach for the still unbalanced and untraded. So we definitely have a huge inefficiency basically right here, because that's a new open range gap from Monday, untraded to, and I want to see that we basically trade back to it on ES as well. That's the gap I'm referring to. So I can maybe label this one out as well. Close to open. So I want to see that we reach definitely consequent encroachment. Perfect would be to me $300 in here, but Maybe we have to lower it a bit. Yeah, I think I'm content with 260 as well. Because I really don't want to focus too much on my P&L and rather basically on or more on price action. So therefore we have reasonable targets where NQ could basically start a smart money reversal or maybe even only retrace. But if it's still a higher time frame retracement, then we will definitely get stopped. Therefore, yeah, we should not always yeah, aim for the best target and also like take the low hanging fruits as well. And to me, we definitely have to reach the engineered sales liquidity, daily sales liquidity, and the contract encroachment level. So really clean targets to reach lower. And I would like to see also that we then form a low in here, or I expect that we form a low in here with reaching 11, because then basically we have the London close macro, which will likely retrace back. So like actually the price action here, so to me that's consolidation, probably as well, or combined with time distortion maybe, because we could aim that we wait basically for the London close macro. That's what I'm trying to say. But I would like to see that we still basically don't trade yeah, higher or even close above the wick right here. So a candle close above the wick right here would be a bit problematic. Only like wicks coming into the upper portion is fine to me, because wicks do the damage, and therefore we definitely still right here have a high resistance run up higher. So in that case, that's definitely a retracement. Still, I would like to see that the retracement stays basically mostly within the lower portion of the higher time frame gap. So that's what I want to see, and I like that we still find resistance higher. And yeah, but if we get stopped in here, that's fine as well. I think I will just leave it like that. So 110. So that's not perfect, not ideal. A close above consequent encroachment. Still, the retracement can be a bit deeper because of the aggressive move to the downside. Therefore, yeah, just keep a wider stop. We have also high volatility today. We already did basically a lot of damage to the sell side, as I already explained before. And it could be definitely the case that we will reach for the liquidity, so for the sell side liquidity down here, and also for the consequent encroachment level right here within a later time. So that's, I think, something in trading, or one of the most, or basically the most important points to understand, that trading is not only about finding a right setup and having the right draw, but it's also about the right time. So that's basically the most important point. We will not move if we did not reach basically the right time. And therefore, sometimes you can only reach liquidity which is engineered especially for a specific time. And only with reaching basically the specific time, we are allowed to trade lower. If you don't like that approach, yeah, I'm fine with that. I'm trading like that. I like it. To me, it makes perfectly sense actually. And yeah, but you basically every strategy can be profitable. It's way more about experience, risk management, and psychology. So that's basically way more important, which can basically only also like get practiced by trading. So you have to be in the charts, you have to look at them, you have to basically engage with them, you have to read the price action and to understand yeah, where basically your setup is most likely to perform and where it's most likely to fail, and when you basically avoid trading at all. So that's like really important. And right now, like that we are still trading lower, Also, we can take a look on the 5-minute chart. So right here, we almost stayed basically only below consequent encroachment of the higher time frame gap. In that case, we close above it, but still we did not close above the lower quadrant or consequent encroachment of the 5-minute fair value gap right here. So definitely still looking more bearish. Right here, I regard this basically the wicks right here as engineered sell liquidity. I would like to see that we still come down, and now, or the next target would be basically consequent encroachment of the higher time frame gap right here. And I would not like to, it would be ideal if a high in here would already be in play and that we don't trade above the wick right here. So that's basically it, and I expect that we form basically a low in here within the London close macro. So therefore, definitely expecting speed with reaching 1045, also like 1050, and with 11 we have to expect that a low is in. So now we are definitely aggressively trading lower. Also, ES is looking more bearish now. Yeah, that's what we want to see. I think I will now delete, or I think I will just delete the engineered sell liquidity right here because it's a bit annoying. Yeah, that's perfect. So right here we basically reach the lower quadrant, and now we even close below the higher time frame gap. That's perfect. I will now also lower my risk to book a bit more, like to basically take 100 off right here, because now I expect with also reaching or approaching the daily sell liquidity pool right here that we are definitely more bearish and basically slowly seeking the sell liquidity down here. And we are now also within the long close macro. So that's aggressive. Now reach the daily sell liquidity right here. I will remove my target because we are really volatile. I like that. Maybe we can even reach a bit lower, maybe for 25,500 as I explained before, but I will lower my risk aggressively. So now basically above the wick right here, 160 locked in profit. So I like that. I'm really content with just basically the risk right here. So what I've booked. And we'll see how this plays out because we still have some minutes left basically until 11 a.m. I'm just watching how we can maybe expand a bit lower, maybe even reach for the lower quadrant of the new opening range gap. So I like actually that we close now even below the daily sell liquidity right here. Now we have to see how we deliver. I like actually the fact that we are reacting to the consequent encroachment level, because with that I know that my analysis is correct in that case. So yeah, really nice to see in that case. Even if we now display through it, we reacted to it, therefore know this level is a valid PDR rate to look for basically. We are really aggressively trading lower. So what I'm looking at is 25,500 now. I think I will even it's really hard to tell. I think I will close by market, but I don't want to get too optimistic. But we have still time left, so we have 12 minutes until 11, so still we are definitely able to reach lower. We would like to be basically out at 10.55, 10.55. Yeah, I really like that. So still reaching lower, that's what I meant. And I will now basically just place my profit target right here. In advance of the, or basically at the lower quadrant level and also the higher time frame gap. And I really expect actually that we reach for it, because if we would have liked to reverse, we would have done it basically at the consequent encroachment level. So lowering my stop now once again, booking 250 in profit right here. Really clean delivery. That's insane what you can do with a fucking micro contract, guys. Micro contract. That's insane. To me, that's insane. I'm 18 years old, and the possibilities you have with trading is just insane, and nobody knows it. It's still so many people doesn't really understand that this actually exists. So the opportunities you have with it, with trading, is insane. It's a difficult journey, but I think it's definitely worth it. So now we have to be cautious. Why? Because a 5-minute candle closed, so we have 10:50 now. And now basically also like the more aggressive macro time, so 10:50 until 11:10 in that case. For every macro, the 20 window is more aggressive. Now we scrapped engineer says liquidity, so that's actually problematic in that case if we now trade higher from here. But because we are really close to the initial target here, basically to the high time frame gap and to the lower quadrant, I still hold basically for it. Yes is trading right now yes is in advance of the upper quadrant level I showed you before. So right here in advance of the upper quadrant level, as you can see, that's what I'm referring to. But now back to NQ. Sorry guys. So now reaching lower, almost basically at the high time frame gap. We have 10:51. We are getting closer basically to our target, not only our price target but also our time target. So we want to be out at basically approaching 11, but we still have some minutes left. And we've really be cautious. Also S&T in here in play. I think I will now lower my stop once again. 280 sounds good. Already now basically my target is even below the consequent encroachment level, and with that I'm completely fine. So because to be out at consequent encroachment right here is definitely perfect. So we reached external liquidity, we reached even daily sales liquidity. So external liquidity on the lower time frame, on the higher time frame we reached a high time frame PD array. Yeah, really clean. And now we will look if we can even reach for the lower quadrant. That would be perfect in that case. Would actually like that we use the order block right here as resistance. We traded into the fair gap right here already. So yeah, maybe I even place my stop now above the high. But I would like to see one more leg to the downside, and I think yeah, I will just commit to the trade. If I get stopped right here, it's okay. Maybe we get a bit more high retracement because we engineered basically sales liquidity right here, with being right in advance of the target. Where is it? Engineered sales liquidity. I will remove that. So we scrapped engineered sales buy side liquidity right here, because as I explained, I, or myself included, would trade a stop above the high right here, expecting that the order block right here would get utilized as resistance on price. Therefore, with the market reaching higher, we sweep buy stops in here, and maybe we are now able to form one more move to the downside, reaching for the final target, the lower quadrant of the new opening range gap, which I was expecting that we trade to basically, really some days ago already. But if we get stopped right here, that's fine to me as well, because we are already way below our initial target and already are really overexpanded. Right, so now from the net SMT would be perfect if we can now trade lower. If not, that's completely fine. So another 5-minute candle opened, and it looks like that we are getting stopped right here. And yeah, I think that's it. Right, so we got stopped, completely fine with that. As I already explained, 10:55 we want to be out of the trade. Why? Because then we will retrace with the London close macro. So you have to basically regard the London close macro with both sides. So definitely the London close macro brings volatility to the downside as well, because we expect right here still lower prices with a high resistance move to the upside, and then with reaching the London close macro, we will definitely see some speed to the downside. But still, with definitely or especially with after 11, we are in a position where we don't want to be actually. Why? Because with the London close macro, or basically with 11, we expect a retracement. We expect that we will seek buy sell liquidity, and even if the retracement isn't deep, we will enter high resistance. We will not trade lower. So therefore, I think we will definitely reach the final target right here. Maybe later on, maybe in a few minutes, but with reaching the London close macro, with approaching 11, that's your profit taking hour. So therefore, we want to be out. But really one of the most clean trades I had in a long time, actually. So I think even the best trade of the year until now, so far. I entered with one contract right here, kept my stop basically above the SMT right here, and I'm really content with that, because we traded higher and failed to basically take out the swing high, traded lower. I added one right here after we had a really clean reaction of the consequent encroachment level. We already had a CSD with breaking basically below the order block, or the bearish breaker in that case right here. And then we aggressively traded lower. I took my first partial right here, right at basically the upper quadrant level of our move to the downside, because I expect this move basically, which will follow, so this leg to the downside, as a market maker sell model on the lower time frame. So we are basically trading a market maker sell model within a higher time frame market maker sell model. That's perfect, because then we can expect a expansion even below basically the external sales liquidity. And that's what we got right here. So first partial right here, and got stopped right here. Really content with the trade, and basically my profits are for the first partial 141, for the second 282. Really clean. So really good trades. I was aiming for the new opening range gap quadrant levels of Monday. I was looking for them already on Thursday, already on Friday. We were only trading higher, found, or basically were able to form a high in here after sweeping buy sell liquidity, daily buy sell liquidity twice. Now we are definitely in a market maker sell model. Today we also do have a trending new opening range gap. Wait, we will look to it on the chart right here. But what I really like is actually that we we have a new opening range gap to the downside, traded lower, that's manipulation, traded higher, traded back to the upper quadrant, and then followed the trend. That's perfect. That's what we want to see. So really clean actually, and there definitely could have been actually a really clean entry right here at the yeah, I would say at the fair gap right here. So that would have been a perfect short opportunity. Why? Because we expect that we now will definitely reach for lower prices for the daily sales liquidity right here. And with that, we already traded back to the upper quadrant of the regular trading hours new open range gap. So yeah, that's what we want to see. This one right here, I will delete this one right here, and the one down here I will leave on basically. So yeah, that's basically it, I think. So right here we have our daily chart as well. So yeah, as you can see, really aggressive move to the downside, swept once, twice, 3, 4 times daily sales liquidity, huge down close candle. Finally some speed on the yeah, daily chart. And I think that's basically it. So that's basically the move to the lower quadrant I was talking about. Consequent approach from quadrants. So yeah, really clean. Trade back to consequent, not consequent approachment, the upper quadrant, or in that case the lower quadrant, because we have a new open range gap to the downside. Respected it, use it basically as resistance, and that's right here, manipulation, followed basically yeah, by a move back to consequent encroachment, not consequent, I'm always saying consequent encroachment. I don't mean CE, I mean the lower quadrant. But we don't want to take any longs in here. Why? Because we're expecting a higher time frame trend to the downside. Therefore, we want to see a yeah, respection basically, or that we respect the level right here. We want to see that we form a high in here, that we trade to the downside, and then right here, this would have been our perfect short opportunity, as I already explained. It's a bit ahead of my trading time, actually. Still, this would have been valid, but we've basically found a perfect, really perfect silver bullet continuation trade, smart money reversal, SMT, CSD, and time being in play. So that's basically it. I hope you enjoyed basically my trade breakdown. Hope you enjoyed the executions. Yeah, I really don't know what happened with my hair actually. Yeah, we have to see what we will do about that. But yeah, see you soon, and yeah, hope you enjoyed it.